Greetings all, Ben here from East West. Going to have a look at gold in this video. Obviously played second fiddle a little bit to silver this week, but it has been a good week for the precious metals. So let's just jump in and have a look at gold. So I'll just very quickly brush over the US dollar and the dollar index. So I talked about this last week, is that this swing down in the dollar index, you know, just as a bit of a proxy for US dollar strength, which is or weakness, which of course is going to help or hinder the direction of the metals to a degree. 17 bars down 2.5%. So this one now, we're now into 18 bars. So we have beaten this in terms of time, but price, we're still yet. We need to fall a little bit further. And the reason that I point that out is that I want to see, obviously, in terms of the rally continuing, the US dollar to weaken off below this level. Okay, that would just suggest that maybe this is going to trend down a bit more. But there's varying signs of, let's just say we're not 100% sure if that's what's going to occur. But it's just something I'm looking for. And when I say I'm looking for it, I'm just looking for it in terms of giving me some sort of background to help me make my decisions about the metal. So now, one interesting thing that the dollar index has done thus far, of course, is that we've just got this nice measured move set up here. So I would look at this and think, okay, this to me looks like it's more likely to come down now. Actually, just turn this on in the measured move sense, to come right down and test into this range that we'd sort of looked at before, which is just down here. So, you know, the takeaway is the technical setup is for more US dollar weakness. Now that, of course, would help, not necessarily guarantee a rally in the precious metals, but would certainly help to keep the bid alive. So with that being said, I don't think I want to say too much more. I'm not trying to go into macro themes here. I've done macro videos. They're not very well received. So I'll just jump in from here straight into gold and let's have a look at it. So just when I look at this, I think that the big question most people are probably asking themselves is like, oh, okay, well, look, we've had this big rally. Is this little correction, is this enough to let us solidify and break on and keep going? I think that's probably, if you're holding gold stocks, gold miners, anything like that's probably the question you're asking, right? Because this was a great run, no doubt about it. But we sort of topped out from that and we've corrected. So look, the answer for me at the moment is we're a little bit in between, because we've sort of I probably just need to quickly just, so what we've done is we have managed to come up and we've sort of wicked through the top of the retracement, okay, but we just ran into the structure here. But this just to me leaves it poised, okay, because to me it still offers the chance of the measured move down. Okay, now if we got the measured move down off this, then I still don't think it's all doom and gloom, but it just means it's going to take more time, because what it would mean, of course, is that we're headed down here. Perhaps we're headed down to correct 50% of the rally in what would be 3 legs down, correction down, and that would be our correction, and that just means that it's going to take more time before we bust through the top here, if we do in fact do that. So there's a couple of good signs here, though. I mean, just moving here a bit closer, right? So we're just in here onto the 4 hour. Now, I've just taken the top of this, which gives us sort of this cluster just around the 61.8. But of course, the last couple of weeks I was talking about, well, maybe coming off this, or even coming off sort of here, this top, before we collapsed. Now, if we do that, which is a very fair thing to do, we've already sort of broken down that resistance that would be found at the natural resistance points at the 61.8s, but this would remain the last one. Okay, so what I'm saying is once we bust this properly, okay, if we can get through this properly, then this sort of measured move resistance becomes it goes away. It's not there. But forgetting about what we can see here, what can we see here? I mean, this looks now like, I don't know if it's been silver that's dragged it, but this is now looks like what you would think is an impulsive trend. Okay, so this is pretty good, I would have thought, just in here. So when I break this down, it's sharp move off the bottom, 50% retracement, and then we've got in a flat sort of pattern here, but then we've got the big explosion away that has broken out of, probably need to tighten that up even a little bit more, is broken out of the initial trend channel. Okay, now when I look at how far this run's extended, we've come up here into the second high probability, and this is where it starts to get a little bit Elliott-like, is we've come up here into the second highest probability area for a wave 3, and now we're just starting to chop sideways. So I think, even though I'm not reluctant to use Elliott wave, but I'm selective about where I apply the idea. But just as a psychological progression of price, that's all you're really doing, right? You're studying the psychology of the price progression. This just looks like what you'd kind of expect. So you got the wave 1, the wave 2, the wave 3, and then you would expect the wave 4 correction, which should be, even though this isn't very sharp, this is quite flat, so maybe you get a sharper sort of correction here. This would kind of be, even though we've ticked into it, this would kind of be the expectation of how you'd expect sort of wave 4 to go down sort of here, 2360, 2350, which we've kind of already ticked into, but you would just expect a bit of time, because the whole point is that it's going to take some time for the market to digest this rally. It has to do that before we kick on and look for another move up. And some of the common areas that you would look for would be, for this next move up to be kind of the length of 1. So kind of something like this. And this is projection, so you take it with a massive grain of salt. Actually, you'd call that the bottom of 2, but you'd have to do the work in. But what I'm saying is that when you see a run up, a nice correction like that to the 50%, and then an extended run like that gets up to one of those areas, this just becomes the general idea of what you'd be expecting. Now, if that was going to happen, well, you could just even take the Elliott wave out of it, because a lot of people just do not like it at all. And you go, okay, well, I've got some structural tops there that kind of fits in. You could just, okay, so that becomes an area that you'd look at. Okay, and that would be sort of what you would be thinking. But even now, I mean, you can see where we are. I mean, it's running into some of this, and that's probably what's stopping it just initially. And then if you mix all that in with those retracement, with the last large retracement we looked at, that's how it kind of all goes together. So generally speaking, my expectation for gold would be that next week we're going to see more of an extension. Not a guarantee, sadly, but I would expect that we're going to... I mean, look, if it was going to play Elliott, you would expect, if that move occurred, something like that, you would expect 3 waves back to correct 50% of this move. Actually, generally, you would be expecting it it'd probably look something more like that. That's what you would be expecting before the market gathered itself and went again. Okay, so what that would mean is it's just on a fractal basis. This, you would expect this to repeat, but just on the larger scale. Okay, that's just what you would expect. So that's kind of how I'm looking at gold at the moment. I mean, it's running, so you stick with it, but it just looks like it's ready to just maybe finish off the week correcting. But I would still be looking for another run next week, but we'll have to wait and see. I mean, it's a tricky beast. So that's where we sit with that. And so we'll just quickly have a look here at GDX. So it's the same. It hasn't really progressed as much as I might have hoped, but we are still just... Everything's kind of the same from last week, right? We've just got this zone and we're just butting up against it as well. So we come down here a little bit closer, and we did have this sort of little wedge for me that we've kind of broken away from, but we've just hit that zone again, and I wouldn't say it concerns me, but I don't like to see that sort of rejection going on. And the other thing that it just keeps me a little bit mindful is this a little bit of divergence. I want to see this broken pretty soon, because you don't want this to smash in too many times, because what you don't want is a repeat of what's happened here, right? Where we just had these two tops sort of run in, and you can almost see it's almost like the same thing. We just don't want that, and then all of a sudden we've got this big splash down, which would probably be not good for the price of gold. But look, I'm still I'm still feeling pretty bullish gold next week. So I'm really hoping that this can challenge those tops. Okay, like I said, this bothers me a little bit for sure. I'm a little bit worried about that because it's just showing waning momentum. But we really only got the good explosive move on Thursday. Really, that's really when silver sort of dragged it all higher. So gold, it's trying to do its thing, but you would hope with GDX this just remains key. So even looking at this on a short term, in terms of let's just fix that. We don't really need that or that. Oh, probably don't need the RSI. So I just on the short term, let's get rid of this wedge because it's kind of done its thing, right? But this trend remains kind of intact. We're just on an hour here, right? This is all very short-term stuff, but this is kind of that remains intact. I just think just basically you would just be looking at that, and you can see how nicely this lines up. So I wouldn't be disappointed if this came in and got tested. I'd be disappointed if we lost this, and especially that, and fell outside this trend channel. That would be problematic. But I think for that to happen, then probably something a bit more unforeseen would have to happen with gold. So that's where I see it. That'd be just your warning shot. Okay, down here, sort of 34. If it started losing $34, came down and challenged this around this sort of 33.75, get outside this trend. Okay, reassessment time. So that's how I'd sit with GDX. So that's it for this week. Thanks for watching. Don't forget to hit like and subscribe. See you in the next video. Bye for now.